I've spent a lot of time trading small caps, and one of the biggest changes in this process for me was that I stopped relying on hype and instead relying on history. When you study how these stocks behave, not just once, but across dozens of similar setups, you start to see what actually repeats, like volume, float, catalyst, gappers. The patterns show up again and again. And that's exactly what we'll walk through today using a real world example, ticker LiPo. This trade trapped a lot of people. LiPo looked like a very strong gapper. It had FDA news, volume, momentum, but then it dumped. While most were caught chasing and got trapped, I was prepared for it, and I had a very successful trade being prepared for it. Not because I had a crystal ball, but because I had seen the setup before. I was able to study historical data to help me, and I'm going to teach you today how to use that historical data to anticipate those fades step by step. So let's look at low float stock that gaps up 15% plus on news and volume pours in. Most traders zoom in on the level 2 and look at that chart to be able to trade it. But what I like to ask is, what happened the last 10-20 times a similar setup occurred? Did the stock hold its gains? Was there a second day run? Or maybe it faded by midday? And that's what historical data gives you, not a guarantee, but a probability. And when you stack these odds in your favor, your trading gets smarter. Let's take a look at LiPo, a small cap biotech that spiked huge in February and then it crashed drastically. And so we're going to break down exactly what happened. And more importantly, we're going to look at how you could have anticipated that fade. So first, if we take a look at dilution risk, we can see that LiPo filed multiple 424B3 forms, 5 of them actually just in the 6 weeks leading up to that move. The latest was on January 1st, 2025. That's a massive red flag because this shows us that they're raising cash into strength. Let's take a look at their cash position. They're doing very bad. Current cash over negative $4.2 billion. What is their quarterly burn? Nearly $3 billion. Months until depleted, until they have no more cash, is already negative. So this tells us that this company was very desperate for cash, and any good news that would come out would most likely be used to dump shares. So if we actually pull up the news itself on February 6th right here, I'm not going to read the whole news, so we're going to summarize content using AI. We can see that AI sentiment tells us that it's bullish. The impact rating says that it has high impact, which is actually very accurate because if we look at the chart on February 6th, we can see that there's a high spike, meaning that news really affected the price of the stock, which means that the AI sentiment is actually very accurate. So let's ask ourselves the real question. What does LiPo usually do on a gap up day like this? Here's what the data says. It tells us that based on the 6 recent setups, the average gap of plus 79.6%, it closed red 5 out of 6 times. They had an average low spike of negative 23.83%. So even before you traded it, this data told you that the ticker is likely to fade. And the more time you actually study what usually happens, the less you'll get shaken up by what's happening right now. So if we look at it right here, we can see that, most of them says close. If we look at the close direction, most of them says below open. We can take a look at the intraday charts. And look at this. It's clear as day, repeating itself, patterns and patterns, repeating itself constantly. And this shows us that this is something that usually happens when this stock gaps up like this. And so this was obviously avoidable. And this stock that I'm showing you right now, I had an amazing trade on it because I looked at this data and I was able to be ready for it. I saw the dump, I saw the gap, and I said this is going to fade. Now, does this mean this is guaranteed? No, but this means that this is what's most likely going to happen. And it isn't about predicting the future, it's about preparing for it. And in a chaotic market, that's one of the real few edges that you have.